Welcome to the Trading Lounge and the Indices report, and starting with the 10-year notes. And as you know, as notes moving down, then stock is moving up. And from this daily chart here, we've been looking at wave 3, wave 4, and wave 5. And now we're looking at a very clear impulse wave to the downside. So after 5 waves, and there's a couple of different ways to count these 5 waves, but at the end of the day, they're both 5 wave structures, and we'll be looking for a counter trend and then another 5 down. So the main point here is that we're looking at continued weakness in this market, which would support money flowing into stock. So looking at the S&P 500 here, and we're coming out of our triangle of major trading level 2 here, and we're looking up for wave 1 and wave 2, and we're looking up for wave 3 here. And in wave 3 we're looking for 5 waves here, and we're working our way through 5 waves within wave 3, and then we'll be looking at wave 4. So essentially we're working across this next largest number, the 2100 here. So normally we would see the arrival, the reaction, the first high above the level, then a correction, normally within group 1 above here, 10, 20 and 30, and group 2 below as the support. But I think that that we may not pull back too far here, and we may just find a variation of the classic trading levels pattern with support on 2100 here and a move up. Because when we think about it here, if we are looking at 5 waves up here, we've got wave 1 here and wave 2 here, then wave 4 can't come back into the price territory of wave 1 here. So we may see some higher ground being had here, but first we need to be above that 2100. Just drilling into that a little bit further through here, we've been tracking, well, from wave 2 here, we're looking for 5 waves up, and we've got it's a little bit difficult on the futures market here to count, and it's easier on the cash market, and I've taken that into account when I'm making these counts. So up for 1 and back for 2, and then we've been looking for wave from wave 2 to wave 3 up here, and that's where we are now. So we're looking for 1 and 2 and 3 and 4 and 5 waves up here for wave 5 here. It can get a bit tricky because large numbers like the 2100 here can skew wave counts as such, but the arrival, the reaction, the first high above the level, and then the correction in this degree of structure as well. And yeah, just drilling in here a little bit further, this is sort of what we're looking at. Yesterday we were around here somewhere, so we're looking for correction back into wave 4, so we've got that, and now it's a simple job of counting 5 waves to the upside here. Wave 3 may end up at 2110 here, but yeah, anyway, in your own way you need to sort of assess and count those 5 waves up. Once they're completed, then we'll be looking for from wave 3 here, we'll be looking for wave 4 back below the 2100 here. So, you know, if you're taking this run up here, counting those 5 waves and exiting would be the main mission. The Dow Jones is same. Just looking at the bigger picture here though, don't worry about too much about the wave count here, and I've got this, instead of a triangle here, I've got it in a very simple A, B and a C here. I know the B wave's above the A wave, and you know, that's fine with corrections, but I've taken this particular count off some stock and some other indices as well in presenting it in this way, but it doesn't make any difference. But the main point here is that we're working with this minor level 8 here. 8's a profit taking number, and we've seen the arrival, the reaction, and now we're looking for the first high above the level here. In another way, we're also looking at this market in longer term, is that, well, this is resistance at the moment, isn't it? Later on, it will become support, and it becomes support by moving above it and then coming back down and checking on it and then moving up from that point there. And we'd be looking up at the next major level, major trading level 2, 20,000. And yeah, we'll see how we go with that. But that will depend on, well, when a market's trading above the 16, 15, the 15 there, if it's going to fail, it's going to fail at at the number 8 here, and in this case I can still see that the wave count's got further to go up. So the normal pathway is the arrival, the reaction, the first high above the level, then an A and a B and a C, and then further up from that point there. So until we've got this level as support, then we still need to be a bit mindful and work through this structure here. Same as the S&P 500 on the 4-hour chart here. From that wave C low, we're looking for 1, 2, 3, 4, 5. We're in the third wave at the moment, and we're just working higher. So this is a corrective pattern across the 18 here. So you can look to move up longer in this structure. So from wave 2, we've got 1, 2, and wave 3 up to here, wave 4. And then wave 5 up through here as well. So tune that in with the S&P 500, and this is what it looks like on the 15-minute chart here, just still working this nice little impulse wave to the upside there. So good trading on this side, and also the European markets too are quite chirpy to the upside as well. So if we start with the DAX can sometimes lead or follow, mostly follow, but can lead the S&P 500, so that's always helpful. And we can see by this structure here from wave 4 here that we've got 1 and 2 and 3 and 4 and 5 just to get to the top of the third wave here, or the fifth of the third, primary third wave there. So there's a lot of legs in this market still to the upside, so a good 2015 in that regards. But yeah, look, working from wave 2 here up to wave 3 here, we're looking for 5 waves, 1, 2, 3, 4 and 5. Now okay, so we're at 11,000 here, and it's been a little bit tricky. It's been tricky in the sense that this move down through here, which is, it looks like an impulse wave and that we would have more to it, but it doesn't seem the case. It does appear to be a 3-wave structure, and it has overlapped wave 1 here somewhat, but lining this up with the other markets, the US markets, we should see this push up for wave 5 here. So we're looking at a double top, which is never the end of the trend, and we're looking at the first high above the level, the 11,000 level here. So yeah, that's it. So we expect that to move up higher through here in 5 waves, and then fold back across here as well, and then eventually look for support there. So all good. I got that in here. Yeah, there we go. So that's pretty much what we're looking for. And yeah, so to the long side, the FTSE as well is looking very good and positive to the upside. In the bigger picture here, we're looking at, well, the medium level here, the 6,565, and we're looking for 5 waves up from this low here. So we've got 1 and 2 and 3 and 4, and I'm a bit sort of this is all a bit cramped up in here, and it does make it a little bit difficult, but we are working with these old highs here as such at the 6.9, and it's really skewed a lot of this price action pattern here. But I think we're pretty close to the mark, and it's also reasonably simple in terms that we know that the trend is up, and we're looking up at we've got 6.9 as the old high, 7,000 is the big number, but it's the 7.2 that I've got my eye on here, the 72 number that we'll be looking for. But in looking at this to the upside here, what sort of concerns me and bothers me about all of this count through here is this wave 4 here. It's just that from wave 3 here and ABC for wave 4 here, it's just a bit small compared to this particular wave 4 here. This one's bigger. So I know that I've done something wrong here, but the penny hasn't dropped yet. So I'm still working through it. But the main point here is that you can see from this minor trading level 8 here, 6,800, that you know, in its own way, it's vibrated across here, but eventually found support and moving up. So it's got the perfect setup to be long at the moment. So we'll be looking for higher ground here, and yeah, so I'm counting this as from this wave C here up for 1 here and back for 2. And I'm not quite sure if that's right as well. It's really messy in there, but in lining that up with other markets, that's probably the case. So, so we're in this third wave up here, and then within that we've got wave 1 and 2 here, 3, 4, and 5. So we should see this move quite swiftly through here. And you know, when we've got a nice accumulation process like this, it really helps with the distribution process. And this is a bit like a spring in a way, a bit like a triangle pattern, and that accumulation will push that up there further. Yeah, Richard Wyckoff, a trader from the 1880s to the 1840s or thereabouts, really put some good work together on accumulation and distribution and squaring time and price and those sorts of things. A friend of Gann's. Anyway, a good trade to the upside here, definitely worth looking at. The Australian market, right, now the Australian market hasn't always been doing what the US market has been doing, but it does have a reasonable relationship with the FTSE, and we can see that the FTSE is going to move higher, so we need to sort of accommodate that situation as well. But in a bit of a nutshell, once again from the bottom here, well, from this low here, we're looking at wave 1, ABC for wave 2, which we'll work through. We've been trading all this through here with a lot of stock in various countries, but we're looking for wave 3. Now, I know that CBA and ANZ came off yesterday, and we're also looking for a top of wave 3, and they're in fact the banking sector. So we were looking at this because the XJO follows the banking sector to a reasonable degree, just a different charting program here. It's a TradingLevels charting program, but basically from the low here, we're looking for wave 1 and 2 and all of the third wave up through to here. So we can see that our local banks had come off yesterday, and rightfully so. We're looking at a pattern that's going to keep the banks here at 8,000 for a while. But in the bigger picture, up for wave 3, 4, and 5, and then a larger correction here. But our main concern is looking for the top of this wave 3 here, and working through this wave 4 here. So with that in mind, we know that there's still upside. It's just a matter of finding this top of wave 3 here. Okay, so yeah, let's just go in and have a bit of a look at that. So what I can have so far is that we've got wave 3 here, wave 4 here, and we're looking for wave 5 to the upside. So with wave 5, you know, it's wave 5 of 3, which I do have up here at the moment. This is the other scenario that that we're looking at. So we can have wave 5 of 3 sitting in here like this, okay? But looking at the FTSE pushing higher, then we need to accommodate a move higher as well from this point here. So it is possible that we can call, instead of having this as wave 5 here, then we could have this as wave 1 and back for wave 2. Now, if this market today folds lower through here, or even, you know, pushes up through here and makes a little bit of a high or something here, and then folds back down here, then we know that wave 4 is obviously starting. But while it's, you know, while it's well above this point here, or at least 5.8, we need to treat it to the long side as well. So what I was, because we've got 2 counts, what I was proposing to do as an approach is pretty much this. So it does count nicely up here as 5 waves, and that could be a top, or it could be just the beginning of wave 1, back 50 or 60% for wave 2, and then moving up from that point there. Okay, so this is where we need to be just a little bit mindful of being long or being short here. So just drilling into that a little bit further with everything in mind, it's pretty much that this this structure coming down from wave 1 here as an A wave, a B wave, and a C wave, and that B wave could be put over there. But the main point here is that it is corrective, and we should see a move higher. That said, well, bottom line is that this is group 2 here, and it hasn't really developed support here on group 2 on the 72 or the 80 here, but it's getting there, isn't it? So once the market opens, and if you can see that we're gaining support on top of 58.72 here, the more support on here, the better, and then look to be long at this point here. But under group 2 here, then we need to be looking to the lower side here. So really this group 2 is a line in the sand, and within that group the 72 is critical as support or resistance. So that's really the number that you're going to have to use today, and we'll see if we're going to follow the FTSE higher, and if that's the case, then we should move up quite strongly in a nice third wave here. So the other driver, of course, is the material sector. Metals were softer overnight, so we're not going to get a lot of support from those. So it'll be interesting to see what side of the 72 this market sits on here. When we look at CBA, for instance, here, we were looking for a wave 3 top here, and we're getting it. This is the medium level 90 here, so it's there's such a high probability that we have a correction here. It's just a matter of what type of correction that we get, and really there's just two types. There's the one that this is the overshoot pattern, which is a bit less, where it doesn't stop at the level here, but the distance it goes above the level is normally the distance it goes below the level. Okay, and then it normally finds some sort of it works into the 90 here and then sort of works up from that point there. But so that's the overshoot pattern. The other one, of course, is the classic trading levels pattern, where we've got the arrival, the reaction here in 3 waves, then the first high above the level, then the A, the B, and the C back into here. So this is the overshoot pattern. So we're kind of expecting it to go down further, but at the same time, we've got support on 90 here. So anyway, keep an eye on what occurs here. And this is the same for ANZ as well. It's finding its top here as well. So it'll be interesting to see what happens, because these will be the drivers for the ASX 200. So look at the volume and the price action that comes in on these today. And of course, having CBA and BHP up as intraday charts when you're trading the ASX 200 is a logical thing to do, because they are the drivers. If they are both going in the same direction, then you're going to see the ASX 200 run like the wind. If they're in opposites, well, then there's a bit of friction, especially when the ASX is at a large number as well. Okay, that's it. Thanks for tuning in. Cheers.